Hi, Kelly Eckhold here to update you on what next week's Reserve Bank meeting might mean for interest rates. Next week I think could be quite momentous because for the first time since August last year, we expect that the Reserve Bank is going to leave the OCR unchanged. If that happens, that in itself probably isn't going to have a big impact on interest rates because markets came to the conclusion that the OCR be unchanged probably 2 or 3 weeks or so ago. All of the interest is really on what the Reserve Bank says or doesn't say about what happens next. And those decisions could have quite big impact on wholesale interest rates and mortgage rates. The markets are primed on the idea that there's probably another 1.5 interest rate cuts due to come by about February next year. Mortgage rates at just under 5% are pretty much consistent with that scenario. But if the Reserve Bank sounds a little bit hawkish in that if they sound like that they're concerned about the short-term inflation outlook, and they could have good reasons to believe that because our forecast suggests that inflation's going to hug pretty close to 3% for the rest of this year, then markets might conclude that there's perhaps no more interest rate cuts coming, or if they are coming, they might be delayed until early next year. And if that happens, then you probably could expect a small rise in interest rates. On the other hand, though, the Reserve Bank could sound a bit dovish. They could, for example, sound concerned that the economy isn't going to recover as fast as they expected, and there could be good reasons to expect that because some of the economic data in the last 6 weeks has been a bit weaker. And if they said a lot about that, then the markets might conclude that certainly an August easing is on the cards and maybe another 1 or 2 after that. And if that happened, you could see wholesale interest rates and those mortgage rates fall a bit. We'll just have to see what happens.